ReaLAWstate with Patti and Kate, but clearly Kate is not here today. So tonight I have a special guest. This is Carrie Humphrey from Embrace Home Loans. Carrie, show them your mug that I love so much that I need to take one home. Look at that, Embrace Home Loans. You got a Yeti. Love a good Yeti.
That's right.
So tonight we are talking to a mortgage lender. So you may remember if you've watched before. If not, you can see some of the old versions. We have them up on YouTube on ReaLAWstate with Patti and Kate. And last time Carrie was here, we talked about VA loans and how to get our veterans into programs and the great programs there are out there. So today is actually part 2 of what I am talking about, which is the Dirty Dozen. Last time we were on here, we talked about the Realtor, and the Dirty Dozen being those 12 advisors or contacts that you should have in your network. If you're starting out getting into real estate investing, you don't know everything. And you can read a lot of books. I've read a lot of books. You can watch a lot of YouTube videos and whatever, and there's this, but you really need to have those people in person to have a conversation, because your book is not interactive. And even before we came on here, Carrie and I were sitting there, shooting the crap, talking about things. And the stuff that I was getting from him and I was learning, and I've been doing this for a while now, was amazing. So, but it just proves my point is you have to make the contacts. You have to learn as much as you can, because real estate investing is a risk like any other kind of investment, and you want to minimize those risks and you want to lose the least amount of money. So you want to maximize your money. So how you're going to do that is talk to people who have experience and know where the pitfalls are. So we could talk all day long about mortgage lending and how to get those lending programs in place when you want to invest. So this is really just a snippet. And we'll give Carrie's contact information at the end if you want to give him a call. If you have questions, I think it would be great. Obviously, you can always reach out to me, because I could just talk about this stuff all day. Anyway, so Carrie, so one of the things we were talking about is we started off, and what I wanted you to know where the focus is. When you are investing in real estate, you could go down and get like a commercial loan. Commercial loans traditionally, and correct me if I'm wrong, are kind of higher interest rate, tend to be a lot more closing costs. And so if there is a way to use your residential mortgage broker to help enable you to get into the investing market, you want to do that.
Sure.
Yeah. And so I just got to get out my notes because we talked about so much. So I want to make sure I don't miss anything. So one of the things we talked about, if you have a home, so we have our homes, and if there's any kind of equity in there, that may be a place that we could tap into for our first investment property.
That's right.
So what are your thoughts on that?
Well, if you have a home and there is equity, depending on how much you have, you can get a line of credit up to a certain loan to value. I think right now the going rate is 80%. So if your value is $500,000 and you owe $300,000, then you have about 20% of equity that you potentially could use through a line of credit. Take that money to go put down towards an investment property.
Yeah.
And then I definitely believe that that's probably tax-wise the best way to go, but it's also just you're borrowing from the home that you've established to go out and buy something that's going to hopefully bring money into you.
Yeah. And what I do like about the line of credit too, and even is you can do this ahead of time. So be proactive.
Right.
The line of credit is just sitting on your property.
That's right.
You don't have to actually tap and take it out until you find.
That's true. I have a line of credit on my property, and the reason why we put that out there several years ago was daughter's going to college, and we were just going to use that to pay for tuition, and it just sits there. Now periodically the bank may run automated value on your home, and they potentially could lower that line of credit, but for as long as you have it on there, I think it's a good idea, as you're mentioning, to do this well before you start shopping for an investment option.
Yeah. And it also gives you an edge too, because if you're able to take out enough, right?
Yeah.
It depends on the value,
True.
what you got left in there. But I'm going to really play with numbers here, people, but let's just say it's a $500,000 house and you have, I don't know, $100,000 mortgage right now, and you could take out a line of credit for $200,000. And maybe you find that rundown property that you want to buy that's less than $200,000, you can now pay cash, or at least that's what you're presenting to that seller, that, hey, I can pay cash. I don't have to wait for loan approval because I got a line of credit on my house that I can write a check off of.
Yes, and I think a seller and a listing agent's best friend is a cash buyer.
Yeah.
So if you're competing against other offers, a cash buyer is definitely the one that would probably be taken.
That's awesome. And I think another thing to think about, and we don't want to go too far down into the weeds on this one, but if you have, say your mortgage you took out a good, 8-10 years ago, I don't know, and you have some equity there, is this a good time to refinance that, Gary? I know the answer to this one, people.
Absolutely. Yes. With the rates still primarily in the threes, even if your rate is not going to improve significantly, just getting those high interest rate credit cards, paid off in order to save money that way as well. That's another reason to refinance. But if you're going to refinance in order to take out money to put down on an investment property, it's the same thing. I mean, if you go from 4.25% on a fairly large loan to 3.75%, that's a big difference in your payment. And when you're looking at it over the course of several years, there's a lot of interest saved in that.
That's amazing. And just that little tidbit about the credit cards too, because we were also talking about when people want to get into real estate investing, one of the things, and we're going to do this, is going to be a completely separate workshop because there's so much to it. And we had a guest on earlier who touched on it a little bit too, is you have to make sure you set yourself up for real estate investing, meaning you need to fix your credit. If your credit is not really good, you want to fix that now before you start getting in the weeds and spending way more money than you need to. So if you take those credit cards.
That's right. And I think that's one of the reasons you've come up with this process of the Dirty Dozen is you having people to give you that kind of information. Your credit determines so much of the opportunity that you may be able to get down the road. The higher your score, the better the rate you're going to get, the better the loan program you'll potentially qualify for. So yes, credit is most important. Paying down credit card debts can help enhance that. Of course, that's another show, but we can talk about someday is how to get your credit scores up. But there are places that you can go that will help you, give you that information on, if I pay these things off, how will it enhance my scores? Actually, we have a thing at our company that allows us to plug in certain things and will give us a projected credit score improvement.
That's cool.
And so that's important. I think you and I were talking about a credit profile. Years ago, 680 was, everybody thought it was a great credit score. The national average is in the 730s. So you definitely want, especially if you're going to go buy an investment property, to be somewhere that's in north of 700 with your credit.
And I don't want you to hear, north of 700, forget it. Like, I'm never getting there. No. There is a plan. You can come up with a plan that is doable. I can't even stress that enough because I've seen it so many times. It is doable.
Yes, absolutely. And I'll say this. I've talked with somebody recently that thinks their scores are, really, really bad. I mean, like below 600, bad. And they've just had some events that have happened in their lives. And they're trying to, put themselves back in a good thing. And it's going to take, maybe 6 to 12 months of a good game plan to get those scores back up. But it can happen. It can happen, but you can't do it by yourself. And the reason I say that is you probably don't know what's all in your credit.
No.
And once you've kind of get somebody to take a look at it and they'll say, well, what happened here? Then you can try to work towards getting that cleared off. That's going to put you in a better position when you go to try to buy something.
You don't know what you don't know.
Right. 100%.
100%. And I think having somebody who knows the game plan, because I think we all, again, read a lot, and maybe, I'm always complaining about people coming to me with their Google attorney advice, so, you go on there thinking, I know how to fix my credit score. I'm going to go on and Google it. Well, you may not get the most accurate information, and you may do something, not even thinking about how that might affect your credit. You really need to check with an expert on that. I can't stress that enough. And don't be afraid or ashamed, because like you said, life happens. Life happened to me not too long ago. Like, life happens, but it's what you do with it, right?
Yeah, that's true.
You can get yourself onto a positive path.
So there's one other thing to point out about credit.
Yeah.
A lot of people hear about Credit Karma. It's online. You can go in and they'll give you your credit score. And just understand that a mortgage lender, even a bank, but a mortgage lender, they get a credit score from the 3 major agencies based on the criteria that has been set forth for a mortgage. It's not necessarily going to be the same credit score that Credit Karma has given you when you go online, because they have different minimum standards for what that score is supposed to look like. So just keep that in mind.
And if you've ever been on Credit Karma, you know what they're trying to sell you. Credit cards. So very different standard.
That's right. Absolutely.
Yeah.
Yes,
so they're telling you how great your score is, so you'll sign up for the next credit card. Don't fall for it, people. I mean, it's a good, like, if you want to go on there and just get an idea, like, am I in the 4s or am I in the 7s? I mean, at least you'll know in the range you're in, but you really want to get the detailed information from somebody who can pull up all those details.
And your credit, once it's pulled, is good for 120 days. So you have plenty of time to work on certain things. If you're shopping for this property or whatever, you got plenty of time.
That's awesome. All right. Well, moving on from that topic, another topic, when you are getting into real estate investing, and there's different ways to invest. So maybe you buy it, you renovate it, but you're going to hold it because you're going to wait for that appreciation and value. But there's plenty of people out there, we've all seen the HGTV shows, where you buy it to renovate it and then you flip it. So you're going to sell it, right, for this increased value. But there are some things that I don't think you know, and things that you have to think about. You always have to keep the buyer, your potential buyer, in mind, right? So talking to the lender isn't so much about, in this scenario, about you getting the loan. Is my potential buyer going to be able to get a loan to buy this house for me so I can move on to my next project? That's right. So what are some things to think about there, Ken?
Sure. Well, let's say your buyer is an FHA customer. They would be an FHA customer because they don't have a lot of money to put down. Maybe they're not a first-time home buyer, but so it's 3.5% for FHA, and the credit scores go down into like the 580 range. Yep. So that's much different than a conventional buyer. But FHA wants to see the difference. Like if you bought the home or the project for $200,000, and then 6 weeks later, after you've done all of your work, 8 weeks, 2 months later, however long it takes. Some are faster than others. Now you're trying to sell it for $280,000, so it's an $80,000 difference. FHA is not going to let that happen unless you show proof of what you've done, and the appraiser agrees with that, because they want to protect their investment with their buyer. And a lot of times, what you'll find is you have to have owned that home for 6 months and 1 day before you sell it in order to use the new value. Interesting.
So just to kind of break that down a little bit, because this was kind of blowing my mind. I haven't done a fix and flip yet, so it's good to know, right? Yeah. So 6 months. So if I buy a property, and let's just say I got a rock star team, because I ain't doing the construction myself, people. I got limits. So nobody wants me building their house. So anyway, so I get some professionals in there, and they're able to turn it around in 2 months. Let's just say it's a real miracle team. And I increase the value from $200,000 that I purchased it for to $280,000. You're saying I can't just sell it to that FHA buyer for $280,000 unless I could prove up.
Yeah, the appraiser is going to have to show that it's worth $280,000 based on the improvements. In other words, if you're trying to make money off of the flip, it's possible that will catch you because your improvements maybe not add up to that. Right, because you got such a great deal. That's right. Yeah, exactly. And so what FHA will say is you can use that new value on the first day after the 6 months is over.
So you have to wait 6 months. Yeah. So it was 6 months and 1 day. So on that 6 months, 1 day, you can sell it for the $280,000, and assuming the market value reflects that in the appraisal, that's true. You're good. All right. So I think that's a very important one, because you're not doing real estate investing to not make money. So what you're putting into it, what you expect to get out of it, so you can then roll into your next project. That's huge. You really need to remember your buyer. Who is that buyer, and what do you have to do? And even some of the FHA requirements, if you want to go in there and really do just a quick and dirty, I'm gonna paint it and look it real pretty, but if you haven't updated the plumbing or the something along that nature, that's a whole nother can of worms. That's right. That's right. So you got to know who your buyer is, because if this is usually when you start real estate investment, you're not buying these high-end homes. You're buying a lower, a potential first-time home buyer.
And the lender is at the mercy of the appraiser.
Yeah.
Who's going to go out there, and if it's an FHA appraiser, they do things a little differently than a conventional appraiser. They're looking for, chipped paint. They're looking for certain things that a conventional appraiser may not pay attention to.
Yeah.
And if those things come back on the appraisal as subject to these being fixed, then you're not closing until they're fixed.
Yeah, which is more money out of your pocket. So you really need to think about those things.
And that includes a fence on the outside.
Oh.
If it's on your property and it has chipped paint, you've got to paint it.
Take the fence down.
Seriously, take it down. You don't need it.
Wow, I didn't even know that. Chip paint on the fence. Like,
it's
who
not
cares?
just the house, it's your property.
Wow, interesting. See, I'm learning stuff all the time. I love it. All right, so another one. This one, I've talked about this in the show before with Kate, and this, because it still pains me. So here in Mass, and a lot of states do condo conversions as well, and I know Carrie can even lend down in Florida. So, but we're staying in the boundaries of Mass here.
Right.
So, in a condo conversion, I learned this the hard way. So you can take a legal pre-existing multifamily, and you can convert it into condos, and then you sell each condo. And obviously the sum of the parts is greater than the whole. So I found this great project, right? It had 4 apartments that were in there, 2 bedrooms. It was really in good condition structurally. We just had to do some updating, put in some, granite, made it really pretty, AC system, etc. And then we go to sell. So my horror story is, I did the condo docs. We had condoed it. And the first buyer that came in was a first-time home buyer. She was the first one to buy a unit. It was only 4 units, so it's a small project as far as condos go. And her lender that she chose said no. And we went, what? And it wasn't based on value. We were fine with value. It was because it was a new condo project, because she was the first one in. So it wasn't, they wanted like 75% occupancy or something like that. And they didn't understand the product, because there's a lot of mortgage companies who are just checking off boxes, right? So here I am, I'm thinking I am a rock star in the investment world. I found this unicorn, as I call it, put all my money into it, and now you're telling me I can't sell it? Are you kidding me? I'm ready to move my children in there to make it occupied. I mean, I am getting creative, people. I'm like, this is going to happen. But then I found out not all lenders are the same. And I did not know Carrie at this time, because otherwise I would have been running to him first. But there was another mortgage broker that I knew, because I'm literally knocking on all lenders' doors at this point, going, somebody has an answer for me. And I was talking to Carrie. His mortgage company does this. So there is a process that if you're thinking about before you even purchase it, people, I'm telling you, you need to have a conversation. So what can you tell us some of the process? Well,
most of your buyers are going to be Fannie Mae or Freddie Mac or FHA buyers, maybe even VA. And those options have specific criteria for what they'll allow. At Embrace, we have a condo support team. And this is what they work on. Exactly. And we do a lot of condos in this country because we're a national lender, especially in Florida. But condos, people look at condos differently. A lot of lenders, as you say, they get scared. And it is a tedious process. However, what we'll do is we will work with you to get the information that we need from you to our condo support group, and they will help get you approved for a Fannie Mae or a Freddie Mac or an FHA loan. Now, FHA is a lot more difficult than a Fannie Mae or Freddie Mac, but since the majority of buyers are those two, Fannie Mae or Freddie Mac, as long as we're opening up the pool for your opportunity, that's what we would try to do. And when you're doing a conversion, it's new. It's not as difficult as a big condo complex. Right. And so there's not as much needed, but you have to think about insurance, the condo, the master insurance, the budget for this, and HOA fees, because you're more than likely going to be charging. In a lot of cases, you're charging fees, and that's for the upkeep of whatever. But that would be looked at, and then we would work with you to try to make sure that you have something in place.
Yes. And I think, and it's kind of a two-step part to it, because the one step that I did know about was getting my condo docs approved by somebody. And when I say somebody, it is a lender. Like, look, because there's certain language that they want to make sure is in there. So God forbid they had to foreclose on it, that they are allowed to do that. And it also talks about the condo fees that are accumulating, and there's certain language they need in there. So they don't want to foreclose, but if they have to, they need to make sure their investment is good. So having your master deed and your condo trust reviewed by a mortgage lender before you go out and start like selling these things. Because if you have to amend those documents, you want to do that before you're selling the units.
That's true. I got one in process right now, and I'm still waiting on those documents from the seller. And, when you're working with a realtor and you're working with a title company, everybody's relying on this process to work. But when you have one side that's kind of not prepared for this, and they're kind of trickling in the information, it does make for, a little bit of panic with the buyer. Because they have put money down. They've stalled what they're planning on doing. And even for the seller to take the house off the market now that it's pending, a lot of this will depend on, what they can provide to us.
And I know, so we had our first time home buyer, like I was talking about, and then this woman, like she fell in love with it, right? It was kind of a niche little building, and it was unique, and she was in love. And just like you said, her lender said, no, we're not lending to it. And she was in tears, which was heartbreaking for me, right? Because I loved how much she loved it, right? And so I was swept in, and I was like, sister, we're going to make this happen. I don't know how. And then when we talked to her lender, I'm like, what is the problem? What do I need to give to you? They weren't set up. They weren't capable of doing this individualized review of it. And so when we found this other lender, they had a department who would actually sit and talk to me, and they looked at it, and they weren't just checking boxes. And then there was this questionnaire. And just like you're saying, you want to make sure your budget is in place, your capital reserves are in place. And they also want to know that you're not just renting it out too, that this is truly going to be your home. And so in our condo docs, we actually put a provision and a restriction in there saying you couldn't just rent it out like an Airbnb or whatever. And lenders love that. Although, not everybody would still approve it. So anyways, so there's that portion. So there's the condo doc side.
That's right.
And then there's somebody to really sit down and understand. And like you said, a lot of times the back room is checking boxes, but you have to tell the story.
Yeah, that's a good. I'm glad you brought
I
that
love
up.
when you said that to me earlier, so I want to make sure that was in here.
So when you are buying a property, and it's just, let's just call it a condo, and we'll just say we're going through this process. We have to prepare the loan for the underwriter. Now, the underwriter is just reading the book. And it's my job as a loan officer, or my processor's job, or whoever's assisting with the loan, to basically tell that story to the underwriters so that they understand it. So there's a lot of layers of, let's just say you are buying a 2-unit. This is the scenario we talked about. You're buying a 2-unit property, you own a house, and what are your options for this 2-unit? Well, the questions that are going to be asked is, are you selling your house that you live in? And if the answer is yes, no problem. You're planning on living in the 2-unit. I'm pointing over here like people can see me pointing over here.
I do that all the time.
So if you are keeping the home that you live in and you're going to buy that as an investment property, well, that changes your options. A primary residence and an investment property are two different programs, or two different ways of setting up a loan. And if you're buying an investment property, you're going to have much more money down. The rates are higher investment property wise. And it goes back to the credit score. The higher your credit score, the better you'll be. But so these are the questions that have to be answered. What is your intentions for that property? And as we get the answers we need, it could open up some layers of paperwork that you have to provide, but our goal is to get you closed. And the only way we can get you closed is to make sure you understand what we need and why we need it. So
no, and I think again, and this is just brings me back to the beginning. It brings me back to the last series we did with Kate. You have to have the conversations. You have to have a person-to-person conversation. Explain to them what you're trying to accomplish. There are ways to accomplish things, but you have to have the conversation, and there's going to be some give and takes. You can't be afraid of that. You really need to find these advisors ahead of time, so they know what to expect and where you're going. And one of the last things that I know we talked about, which I think is very exciting. So I wasn't originally going to talk about this, but when we were talking before the video, I was like, that needs to be told. So a lot of you out there who are thinking about real estate investing are more likely than not self-employed, because there's just a different mindset. I think when you're self-employed, you're a hustler, you're out there. Not to say if you're not self-employed, you're not a hustler. So please.
I'm not self-employed. So.
But you have your own area here. You kind of are. So, but you're out there hustling, and you kind of have this mindset, right? So if you're self-employed, we all come back to our taxes and what you're reporting and what you're writing off, what's a cost of goods sold. Like, I won't even bore you with all that, but it makes my head spin this time of year every year. So if I want to do that, that also could be a point of intimidation for me of how am I going to qualify for a loan?
Yep.
So you guys at Embrace have kind of a cool little program. So tell us about that.
Well, we do. It's a niche product called Beyond, and it's specifically for two different types of people. One is a self-employed borrower that's looking to either invest or buy as a primary residence. And then the flip side of that is another side is people that have had a credit challenge or a bad credit event in their past. So you got two different paths with this loan.
Okay.
But going back to the primary part of this, which is the investment piece, because a large percentage of people that are self-employed, a lot of times they don't show income on their tax returns. And this has been going on for 10 or 11 years since the mortgage industry kind of went underwater and back out.
Okay.
And when they came back out of the water, a lot of the loan programs went away. And that affected self-employed people.
Yeah.
So, but now there are lenders are starting to loosen their belts a little bit. But this program right here it could be for a flipper. It could be for, someone that wants to buy and have as an investment 2 unit, 3 unit, 4 unit. There's all different types of parts of this particular program that will help a self-employed buyer. Now, how do they get them approved? Well, credit score is one of it.
Okay, back to that credit score.
Back to everything goes back to credit.
Yeah.
But number two is if you show deposits in a business bank statement, then what we would do is take the last 24 months, as long as you've had it for 24 months, we can actually do 12 months as well. Depending on how long you've had your business, 24 months is your best option.
Okay.
And as long as you have consistently made deposits from your business into that account, then we're going to do a profit and loss to go along with that. We're going to add up all your deposits, figure out how much you had for expenses, subtract that, and you're going to come up with a whole number, and we're going to divide that by 24.
Yeah.
That becomes your monthly gross income. And if it qualifies for what you're trying to accomplish, then you can do that type of a purchase.
Yeah.
Whether it's an investment or a primary residence.
Amazing.
It is.
Especially probably your realtors out there. So any realtors who are trying to get into real estate investing, like you've been in the market for a while and you're kind of understanding your area, you understand maybe some of the neighborhoods that are up and coming, and you want to jump in and you're thinking, how the heck am I going to do that? Because I don't get a steady paycheck. Well,
going back to the preparation part of this. Yeah. Get a business bank account.
Well, there is that.
Get a business bank account and be consistent with what you do with it.
Yeah.
Because these type of programs are going to have a paper trail. You're going to have to prove, through invoices. Maybe it's you sold a home and you got your check. You put that in. You just have to show some kind of proof.
Yeah.
But I don't think that what you're trying to talk to them into doing is selling an investment property tomorrow.
No,
buying one tomorrow.
Well, unless you're ready.
Unless you're ready. But if you take the time to prepare yourself for that, and that includes improving your credit, getting your business things kind of organized, then you're going to be in a much more successful and better position later on.
And I think, and that's actually kind of the whole point of this whole Dirty Dozen series that we're doing, is this is part of the prep work. So we're trying to give you little tidbits in different areas that you want to start networking, you want to start talking, start having those conversations, see what you have to do. And after you've spoken to all these people that we're having these interviews with, but this time next year, you're going to be in like 1,000 times better shape, and your 2020 could be amazing, could be your best year yet. And it sounds like it's a year away. People, the time is going by anyways, right? Invest in yourself, invest in these relationships. And even, you know what these relationships do too, which I think is just so amazing. I just got chills just thinking about what I was going to say to you. So is when you have these relationships, right? So, all right, I'm talking to Carrie. Look, this is kind of what I want to do for the next year. These are the projects I want to do. Now he has that in his mind. He could be out at a lunch with a cousin someday or something. The cousin's like, yeah, I got this property. I want to get rid of it. Well, his wife's a realtor, so she'll probably get it. But he could say to me, hey, I have this attorney who might want to invest in it, you know, and then skip the realtor, right? So it's a horrible thing is I'm right here in front of a real estate company, but
it's true.
It's true. There is a lot that goes in the market, but there are a lot that don't go in the market. So if you're thinking about investing, these are the people that you want to make relationships with. Tell them what your plan is. Everybody is your advocate, right? Because Carrie wants to look out for you. He's obviously wants to get the business too, but it's a win-win. It is a total win-win. So you want to find these people. So anyways, we've been talking a long time. We try to keep these short, but whenever we're together, it's not very short because we can just talk for it. And we're so charming, aren't we? So anyway, so Carrie, if they want to get a hold of you, and I'll put this in the video, how do they do that?
Well, they can call me anytime or text. 774-222-3988 is my local cell phone number, and I answer my phones.
He does answer.
I answer my phones. I answer my text. I'm here to help. You know, we talked about this. I'm a former high school teacher, so I spent a long time in education. That's my formal background. So I enjoy teaching, and I think, you know, the one thing that we should harp more on, and as this process increases, is, you know, these trusted advisors.
Trusted advisors, Kate's favorite phrase.
Trusted advisors that are in your circle. Whether it's a contractor or a plumber or a painter, whoever. There's a lot of people out there that you just can't trust. And that's why a circle like this is so important, is because even if I'm not the lender, you know, I'm going to, you know, answer your questions. And I think, you know, Patti and Kate and everybody else would do the same thing. So that's just having people you can trust to ask these questions and get solid answers. And I can promise you this, if I don't have the answer, I'll get the answer, because there's a lot of things that change in this business that, you know, makes me want to go back over there to my book and start reading up, make sure I didn't say anything wrong.
Nope, all right on the money. And you taught me a few things. I love it. So yeah, definitely reach out to people. You can always reach out to me anytime, or Kate here at Bull, which is, well, we'll put that on there, but it's also on our Facebook page. So, you know, you get a little cheat sheet, but that's 508-999-9800. But thank you for tuning in. Please share this with people, because I think anybody that you know that wants to get into the real estate investing game, these videos are intended to be tidbits and insight into what you need to think about to reduce your risk. There's always risk, but we want to minimize it the best we can. And I think these, you know, it's such great value I think we added here today. So thank you very much for coming.
Glad to be here.
Carrie's always a delight. All right, so signing off, and I will see you later.
Bye. Don't hit